Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Wednesday, July 3rd. The markets will be closing today, a little early today. So, West Coast time, the stock market will be closing at 10 a.m. and then 11 o'clock up for the bond market. So, it could obviously very much change as we go into the long weekend here. They do open back up on Friday, but a lot of the big guys will be out at their vacation homes in the Hamptons on Wall Street. So probably more day traders. So we could have some volatility because you never know what the day traders will be doing. But on Monday, I would expect things to kind of normalize again. So be cautious over the next couple of days. What's going on. So we'll jump right into the economic news releases here, and we've got the ADP employment, for the month of June. So these are the private jobs that ADP reports out there as Friday's numbers. These could probably be the biggest numbers for this month. Friday's numbers, which will be the from the Bureau of Labor statistics coming out with their unemployment and job numbers and such. So that's one that could move the markets a little bit, and those rings may not really be shown when the big boys get back on Monday. So be prepared for that. So we had 134,000 reported back in May, and then and basic came in at 188. So the forecast, a lot of them were in there. We didn't put one in there, but a lot of people were kind of estimated, were whispering around 160. So it came in a lot better than they anticipated at the 188 level here. The next item here is the weekly jobless claims we get every week, and we had 348,000 people applying for unemployment last week. We figured it would kind of temper down a little bit down to about 346, so it improved a little bit further. So it dropped down to 343 this week, so not as bad as the previous week or even or what the forecast were. So a little bit better than the forecast. So far good news here. And then we got the trade deficit for the month of May. This will probably take a little time for investors to kind of digest, but we had a negative, basically 40.1 billion in deficit. And we figured it would kind of open up a little bit further to about 40.2, but it jumped all the way to 45 billion. So, investors will probably look at this a little bit more, find out what's going on here. It may be due to currency changes here. So this is probably something to do with more or less currencies. Maybe U.S. dollar got a little bit stronger against places, so our cost of goods selling wasn't quite out. And then China, has been showing a lot of slowing as well. And last but not least, we got the ISM services or ISM non-manufacturing for the month of June, and this is an index that covers the service industry. So anything above 50 is considered expansion. So we had a 53.7 reading back in May, and we figured that was kind of grow to about 54.4, and it actually dropped down to 52.2. So not bad numbers. Most of the ones there. Trade deficit, they won't really affect the markets as much, even though they'll kind of look at it. But they'll probably want to see the reason behind it, and if that reason it warrants attention, then it'll probably come out. But ISM services is definitely something we'll kind of keep an eye up, and this is kind of important as we have a lot of our economy is run on the service industry here. So this is something that definitely we need to kind of keep an eye on if this continues the trend going downwards to a contraction standpoint. So we're going to jump over to the headline news. And so far, the stock market is a little mixed. It started off the morning as a negative connotation, and we'll get into the reason being for that. But since then, over the last couple hours, the stock market is showing some improvement. So the Dow and Nasdaq was up, S&P was down slightly, but that all could change here. And the economic numbers that came out for the most part kind of were positive numbers, but the reason why I was going down is there's a lot of stuff going on with the Euro's debt. Portugal, they had two cabinet members that left, so there's concern that maybe they have some anti-austerity measures. Have elections coming in with the feeling of towards anti-austerity measures, so that's a concern. And then the protests that are going on in Egypt, so again, kind of bloody over there. So those are creating concerns. And then also, more data came out of China on their services sector, where it's showing more decline. So of course things are slowing even further. So that just kind of the data is kind of supporting what we already know, that China's economy is slowing down further. And then oil, because of the Egypt protests, the futures jumped up to 101 per barrel. So oil prices have jumped up a bit more, quite a bit actually. So kind of keep an eye on that, especially with summer, the driving season, they say. people driving, that gas could get pretty expensive. All right, so let's go ahead and see how this is all going to parlay into the interest rates. And we had a bit of a decline yesterday. We dropped about 20 basis points yesterday, and right now we're kind of about where we left off. So pricing for today is about where we left off yesterday at the end of the day. Uh, so most people had kind of price worsening in yesterday, but we're still above the 10-day moving average, which kind of helps us out a little bit and creates another level of support there. But it's something definitely we want to kind of keep our eye open as we try to create this trend go upwards. And it looks like right now we're kind of going in a sideways pattern. So we'll have to kind of wait and see if Friday or Monday maybe brings us up there. But we'll see you guys on Friday. I'll do a short report on Friday as it's going to be kind of a slow day with the, we got big numbers there, but, like I said, the big boys are out on vacation and there may not be a lot of activity in the market. So, all right, folks, you guys have a wonderful day and enjoy your 4th of July. Be safe, and we'll see you on Friday. Thanks for watching.